All right. Good morning.
How are you doing?
Supposed to.
You okay?
Yeah, I'm great.
Good man.
So today we're gonna start by back testing a couple of things, right? And then we're
Okay.
gonna put in the highest level of chart. Yesterday we started with. Let me get off the 16 second because that's not necessary.
Huh.
Yeah. So let me make sure everything is working. Here we go. All right. Can you?
Yeah, crystal
All right.
clear.
So listen, I'm streaming on TikTok too. So at the end of the stream, will you remind me to um log out of that? Because I can't put it on Restreamio until I get an actual streaming key. But
Okay.
listen, like I want you guys to. Here's the back test, right? The back test is we are going to define how many. Let's get one. Let's get this down here. Right? We are going to define, and this is just off the cuff. This is for August. I might as well add these. So this is 22. This is 6. And this is, fuck, what was that? Damn it. I need to stop doing this at 5 o'clock in the morning. So, there we go. All right. So basically, what this back test is going to consist of is we are going to measure. Let me turn the book off and the curves. All right. Right now we should have just our captain's boxes on.
Yeah.
Only one selected is from 930 to 1700 because we're going to look at how many times the RTH hours between 930 to 1700 um, range, DNP, which is directional with no pullback, or directional with pullback, right? And so we're going to see how many times we revert to the mean. Well, to revert to the mean, you have to have a constant. And since
Yes.
the mean in most intraday data doesn't have a constant, like we can't use a 5 EMA, we can't use like the mean because it's always changing in live. We're just going to use the 930 price as a constant, right?
Okay.
So the first measurement that we're going to do is we are going to define the constant. Well, the constant is on the 1 minute chart. We're going to highlight, which you guys all can have access to. Just go to the time clusters, the 930, right? So that's going to be the mean. 930 on the 1 minute chart is the mean. That whole candle from high to low, the 930 candle is going to be the mean. We're going to count how many hours we return back to that 930, right? We're
Okay.
going to define. So in this case, if we swing high, we swing low, then to swing high, then to swing low, and you can see the hourlies are going up and down, right?
Oh.
That's going to be a directional with pullback, right? A directional with range, a range, right, is going to look like such, right? It's going to look like such, like 4 or more swipes. Because remember, we're not counting every single 5 minute bar that swipes the 930. We're counting every single hourly bar that comes back and touches the 930 in any way, right? So this day we came back and touched 8 out of 8 hours, right? So
Yeah.
1, 2, 3, 4, 5, 6, 7, 8. This would be considered a range, right? And it's also, once we get to it, we're going to be collecting the data on the percentage. Why are we not using the handles? Because the handles will
Yeah.
shift the
Yeah.
percentage over time, right? So
Yeah.
0.54% in today's market, it has a value of 108 handles. Guess what? In 2019, in 2018, in 2002, and 1999, guess what? 0.54% was like 30 handles. So we're going to use a percentage because like I said yesterday, if you do this the right way, this long rotational side and this short rotational side will define these hourly swings, right? So this is all the average long rotational swings, short rotational swings, based off of the last 3 weeks worth of average of these swings. And why is this kind of test important to understand, to do for everybody, to include retail, right? This is important to do because it sets our expectation management up correctly for where our target should be, where our stops can be. Because like I've been telling you guys last month, right? These hourly boxes, previous hour mids, and the 5-9 boxes will tell you the market condition you're in, and you can build a risk profile around that, right? And so if we know that the average swing low is 66% and we're trying to go long here, anywhere in these hours, right? We know that we should be able to average 66 handles down, and that's where our stop should go if that's average, right?
Yeah.
And or if we know that the average rotational size up is 70 handles, and we're entering, like let's say this is a swing right here. Zoom in so you guys can see it. Right, this is the bottom of the swing.
Yeah.
Right here. And we're entering on the other side of this 930 right here. Right, we have to be aware that we've already moved half of the long rotational size of 69. So our expectation management, the moment we fail to take out previous hour highs, if we already identified that we're in a range of market, we know we're shooting our 10 contracts, whatever, right? We need to know that like maybe we don't, like maybe we shoot for even lower hanging fruit, like 25 handles, 10 handles, we go to those kind of systems.
Yeah.
Et cetera, et cetera.
Yeah.
Does this make sense to everybody in the chat? Okay, so the tools that we're using is we're going to be using the captain's boxes with just one of them selected. So I use section 21. We selected the 0930 for the 1700. It's only selected for the RTH, right? We're going to be using the time clusters, which has just the 930 selected, right?
Yeah, gotta get
and
that.
then when you come over here, we're going to go to this bar pattern right here, right? This one right here, it's under this little tab. That way we can click on it. We can click the beginning of the blue box, just right here, in the blue box, and it will pull up the structure for us. Oh my God, I've already restarted my computer. If it does this shit again, just stay on. You can see we have the settings to line close, right? So it is a little bit more clear. This is the difference between close prices.
Your sound. We got an issue with sound, Mickey. I think.
Can nobody hear me?
It's cutting.
Oh yeah.
I can hear you, but you're cutting in and out. Is anyone else experienced that, or is it just my side?
Can you hear me better now?
Chat.
I'm about to break this fucking computer.
Yeah.
Matt, can you get a heads up? If you guys can hear me.
Nobody's. Yeah, so somebody in the YouTube chat is saying that we got choppy sound.
Okay.
Thanks, David.
Thanks, David. That sucks. Let me see what I can do.
Yeah.
Control Alt Delete. Let's go to Task Manager. Now.
It's worse. It's like as if it's a dodgy cable, you know, it's kind of, I know it isn't, but that's the sound that's coming back.
My computer shutting down, stay on. All right.
Whoa.
Listen, this is the problem with quant.
No, it's you might need a reboot.
You always have like shitty. You always have too much running in the background.
It's got worse, Mickey.
Give me a second. Let me shut down some things. I literally bought a gaming computer for this game shit. Give me 1 second, I have to shut down.
No. Yeah, so I'm getting messages, some private messages from the chat, which are saying it's the same for everyone. It's kind of like cutting out, but kind of messy as well when you talk. I'm not sure if you can hear me.
Do me a favor. You continue to do the exercise. And I'm going to regroup and try to log off those TikTok. I think this is TikTok. Chinese. Yep.
I think guys, Mickey's going to reboot. So if you haven't got the time clusters by BlueJew indicator, I'll give you guys a minute to grab that. And what you're going to need to do when you've got that on your chart is open up the configuration box, and you'll see a bunch of check boxes, which are the time clusters, starting at midnight, coming down to 14:05. Uncheck everything except 9:30, and that should give you that as what Mickey has there, that green box on the chart. So I'll give you guys a minute to do that. I trust you all have the HL boxes and the 510 boxes. I just actually need to add that one to this chart. Bear with me. Okay. So the range then that we can mark on the 510 boxes, I'm hoping we're getting this bit right, is 930 to 1700 hours. So what you're going to need to do is open up the configuration. And then if you kind of scroll halfway down, and you'll see the general settings section. Basically uncheck everything except for one. I'll leave that up to you. For me, I am leaving session 0 on. And then in the time slot for session 0, which is above the general settings, we're going to make that 0930 to 1700, and then that should draw a box for us. What have I done wrong? Okay. Yes, and then you get that box. You can alter the color if you want to. So if I look, for example, at, I can turn this one back on now, can't I? Yeah, I can see that clearly on the chart. So for me, I left the colors at default. So the 930 to 1700 hours is kind of that nice sort of lilac-y blue, and we have the green for the actual candle itself, where we are looking to see what the to see whether it's range DMP or DWP. If there's any questions, just drop them in the chat. Okay, okay. Okay. A few days ago. I think the indicators are getting pushed.
All right, I'm back.
Mickey's back. There we go.
This is better?
It's a lot better.
Okay, dude. If anybody knows anything about brand new computers, I bought this brand new computer. It's like an ASUS. It's a gaming computer. I'll send the details. Just like I think it needs some configuration because it's really being ridiculous. All right, did you re-explain the exercise?
Yeah. So what I did, well, actually, what I did was I talked everyone through how to get the indicator set up on the chart there.
Okay.
And we've got a message or question from okay, asking about how can he get the indicators, but I think that's already been communicated. But I don't know if you want to address that, Mickey.
No, I mean, I'm pretty open.
Yeah.
Right, so, like I said, we're going to do this exercise where we define how many times the RTH from 9:30 to 16:30 has a range day, which we've already discussed, reversion to the mean style day, a directional with no pullbacks or directional with pullbacks. Directional with no pullbacks are the trend days. Directional with pullbacks are when we have wild swings like you can see here, right?
Yeah.
So if we're going to be testing for reversion of the mean, we have to have a mean, right? And since most of the means are live, whether it's VWAP, whatever you decide to use as a mean, whatever, I don't care. However, for this exercise, we're going to use 9:30 on the 1 minute chart, that whole 1 minute candle of the 9:30, and we're going to count how many hours out of the 8, not how many times, but how many hours come back and touch that 9:30, right? So this is an example of a DWP, a directional with pullback, right? Because we touched the 9:31, 2, 3, 4, 5 of the 8 hours, right? We go in a direction and then we turn back, right? This is an example of a range, right?
Yeah.
The 9:30 is touched more than 4 times throughout the 8 hours, and actually it's touched all 8 hours, right? We're going to be using the time clusters and the captain's hourly boxes to test this, right? So you need to have that on, right? And then we're going to be using, if you come over here, right here, this bar pattern, right? You click on that, you click on the very far left side of the blue box that represents the 9:30 and all the way to the right. It doesn't matter where you click, and it's going to pull up the structure, right? So if you leave it on the default setting, it will do high-low bars, right? You change the line close, and it gives you a more cleaner look, right?
Got it.
All right. So I've done all the way to September. So let's do September and August. And out of September and August, we had 22 days that ranged, 6 that trended, and 12 that had directional with pullbacks, right? Now, why is this important to know, right? Right? We already talked about, like, these swings happen, are measured, and they can set realistic expectations, right? And so if you look, right, for example, the long rotational swing is 69, the short rotational swing is 66. That's on average using the last 3 weeks for the data, right? I don't know how to get you guys that. Do you see, like, that's what that is telling us, right? The average long rotational is 69, and that goes to 63
mm,
right there. This
mm,
is
mm.
what I'm talking about, right? So it's all about expectation management. I stop asking about an indicator, right? It's pretty obvious. Like this isn't the time and place to figure out when you can get an indicator. If you want my indicator, you got to be part of my Substack subscribers. If not, I'm sure there's plenty of other things out there that are free that will give you the captain's boxes indicators. All right. So this isn't a sales pitch for my indicators. Don't. I appreciate your $8 a month, but it's just distracting. Like you got to get creative with your trading. Like you can use the one setup for life and draw out the boxes. There's a one called sessions.
Yeah. There's
Like
range box as
there's
well.
range
There's loads.
boxes. You
Yeah,
can,
yeah,
or you can just manually draw it out, right?
yeah.
All right. So let's talk about, and I want some participation in the audience. Why this exercise is important, and why understanding the average long swing versus short swing is important to know. What are y'all? What is your thought, Costa?
Well, target management, stop loss, positioning, target positioning, and we can also identify um, where likely extensions um,
Hmm.
are going, and obviously
For
in
me,
terms, well,
it was important to do this exercise because when you go on Twitter, you see all these people that share these false expectations, like 100 handles, 200 handles, 300 handles move. While yes, they do happen, but in the last 2 months, they happened 6 times, 6 times out of the last 2 months, right? So it's like realistic expectations and responsible growth mindset and being a good steward of your leverage, right? Because leverage is to be used with respect,
yeah,
right? Is huge, right? And like so, it gives you more realistic expectations and less guessing. So when you see price swiping back and forth to 930, number one, it tells you it lets you identify the market condition you're in, and it also lets you identify, like how like me and Mr. 930 used to have this issue, right, where we'd watch our trade go up thousands of dollars, $1,500, $3,000 just to come back on us, and
yeah,
then we'd take a $200
yeah,
loss or profit, right, when we watched our profits go up to three thousand
yeah,
dollars. Well,
psychologically
this
damaging.
is yeah, that is psychologically damaging because
Mm,
like you don't realize the market condition you're trading within,
mm, mm,
right? So
mm.
you do these kind of exercises to have build those expectations, so if you're up $3,000 on a short and it starts coming back, right? And we take out the previous hour mid high like this, and we start trending up, take profit, right?
Absolutely.
You know, 'cause you're here to make money, not look cool on Twitter, not do anything else,
It's
right?
funny though, you say that, Mickey, and just actually within the example that you were showing there with the numbers that you have, range DMP to WP, but looking at it structurally, the way you see it, there is multiple opportunities
Mm-hmm.
it to engage in that trade where you can be, whether it's 5, 10, 15, 25 handles or whatever, but
Mm-hmm.
to engage with that and potentially be profiting from that, right? It's easier to get 25, for example, than it is to get 125.
Exactly. And see, when you know how the market moves,
Mm,
right? I'm not saying you have to be a liquidity wizard or know how market books or how the sell side up. I'm just saying how it momentum moves intraday, right? You can be more realistic with your goals and how you decide to trade, right? That's why I told everybody to collect every freaking 15-minute data, right? So this 15-minute data low, this 15-minute takes out this 15-minute low. What's the probability of us returning to this high? What's the probability of us returning to this high? Because what you'll see is these big swings like this, they happen at a specific 5 minute, 15 minute, and 5, 10, and 15 minute. And if you collect data like me and Costa have done, right? I know like one of the common strategies out there is the stop hunt or the liquidity raid, right? I've gone back the last 2,000 days for every 5 minute, 10 minute, and 15 minute, and I have the highest probable liquidity rate times, and I have the highest probable distribution times, right? Why? So we can have that realistic expectations. All right, so let's go on. So we see right here, this is a 930 candle. It touches 1, 2, 3, 4, 5 of the 8 hours, right? This is a directional with pullback because we swing high, we swing low, we swing high, right? That would be considered either range or DWP, right?
Yeah.
This is what you guys saw the last one. All right, moving to this one, 930 being the constant variable. 930 being the mean. Do we revert to the mean this day? This is 930. Swipe down. 1, 2, 3, 4, 5 of the 8 hours we do, right? So this is a DWP, a directional with pullback, right? And I'm only going over these because I've already collected these days, but I'm getting you caught up because I did it yesterday. All right. So now let's go over here. 930, green bar, the mean. 1, 2, 3, 4, 5, 6 of the 8 hours touch the 930. Reversion of the mean, even though this was FOMC, this is a reversion solid day, this is a range. And what defines this DWP is if the hourlies are stacking lower and then the hourly also start taking up the highs of the previous hours. Right, so this would be a DWP because 1, 2, 3, 4 of the hours are consecutive and then they go down and we stay lower. So this is these swings right here, right? Remember we can measure the average long swing, short swing. At this point it was 67. Like you get 105 off of that one. You get 63 off of this one and a lot of 60s off of these. So this would be a DWP day. This is definitely a range day. I think this has to be a holiday or something. Okay, so the 930 strip is messing up. When it starts doing that, like we're just going to focus on this big green bar right here. That's the 930 opening price. 1, 2, 3, 4, 5, 6 of the 8 hours.
Yeah.
Touch that.
Bloody hell.
What the fucking hell is with all of my strips going berserkos? It was working yesterday, so 930 is right here. 1, 2, 3, 4. For the 8, touch the 930. Right, this one has large directional swings. This is actually because of the percentage being under 1%. Right, I'm defining this as a range.
Yeah.
Oh, now it wants to work. Now my green line is working. It must have been that day, it just glitched everything. All right, so 1, 2, 3, 4. 4 of the 8 touch the 930 price, right? And then we had this swing up with range down, right? So this is going to be a DWP. Finally, September 11th. And September 11th, right, was the obvious reversion of the mean in the morning with the DNP in the afternoon. But I categorize this as a DNP because it was just a move down, touched the 930, went away from it, came back up just to swipe through it, and then we continue. So this is the trend day. This is the only trend day that we have defined so far in the month of September. All right, obviously range day right here. 1, 2, 3, 4 for the hours. Touch the 930, but we come down and then back up. Range day right here. All 7 out of the 8 hours touch the 930 price. Yeah. We're over the 1% though, but it's just a reversion of the mean. All right, second trend day here.
Yeah.
Actually, let's go on in measure this. This is 110 handle swing. So yes, one touched the 930 and then we went away, but then we ended up DWP in the afternoon. So this would be a DWP because one, remember the hourly boxes define the market condition and they define, like what kind of market condition you're in. You're only in a trend for 3 of the 8 hours. So 3 of the 8 hours. So this is defined as a DWP.
Okay, makes sense.
All right. And so forth and so forth. So this is an exercise that tomorrow, when we pick this up, I've already done August and September, and tomorrow we're going to knock out whatever comes before August, July. We'll do July, and this will be on this YouTube. We're going to start doing this. So let me save this because I'm going to delete it all.
Would you recommend that some spreadsheet might be made to capture this detail for each one of these by date?
Yeah, you could, because like eventually this is going to lead to us measuring the average swings as well.
Okay.
But like I'm not a retiree like you and Jerry. I work 12 hours a day, and then I have families and all that stuff.
I'll make you a spreadsheet.
No, I mean, I'm not saying that, but you guys are my back office support.
Yeah.
All right, so now let's put the highest probability of the day on the charts. All right, let's start with our dumb. Damn it. Just delete this. Let's delete this. Now I'm gonna have all these freaking arrows everywhere. This is not showing the blue boxes. All right, so starting with the daily chart, NFP Friday in previous month 50%, right here, right? September 11th, which was a trend day, right? Was a confirmation that we should be, dipping our toes with exposure in, equities. We should be harvesting risk premium, selling options premium. That we should be expecting the low of the day to be formed between 5 o'clock and 11 in the morning, Eastern time. Come over to the weekly, right? We have a constant variable, right? Which is this 5 EMA. That's a constant variable. We know that we're not using that to make trade decisions, but to see what the market's priced in so far. And
yeah,
we've made it up to 2.3.
Yeah.
So this thing, especially for the last trading week of the month, it looks like it's starting to slow down.
Yes.
And it did not extend that far this week. But this week it extended all the way to 3.5. Anywhere, the basic rule of thumb is between 2.5% and 5%. You expect it to expand that high up there, but then you wait for the next week to slow down and let everything catch up, because remember, this pricing in effect defines the workflow process of life cycle of a trade, right? So it has nothing to do with the pricing algo or how high the price is. It's just broken orders are being broken. The further away this is getting extended, the more backlog you're getting in the back office, right?
Yeah.
All right. So with that being said, going over here, erase this. I might have just random lines everywhere, right? For the ICT folks in the room, we came down 1, 2, had 1, 2, so 2 tests off the low of the 1800 Sunday opening price, and then we swiped below it, but couldn't get a body closure below it on the hourly. So you guys, it's safe to assume that one of these could be the low of the week. If you have questions about if these relative equal lows, actually that was taken out. So yeah. I was about to say, if you had questions of what's the probabilities of these relative equal lows of being taken out, use the VET, anchor it off of where we currently are, and pull the put a standard deviation right there. You can even do it to the highs of where Asia's these are, and it'll give you the probabilities. All right, for the DR folks, Tuesday was your opening range yesterday, and you can see that we went above it, and we found rejection off the midpoint so far, and we're heading higher, right? So for this, it looks like there's a probability that yesterday put in the low of the week, and if this midline holds, then we can expect to continue going higher, right?
Yeah.
So now moving to our statistics, right? Did the market give us any clues? Right? So far overnight, what clue do you see on the battlefield?
So I can put my boxes back on. We haven't taken yesterday's high during Asia.
Nope.
We kind of, but then since Asia's closed and given what we know about Asia, we haven't actually returned to the other side. So potentially that comes later. And with that as a potential move, you could well be making that high up there. Data wise, I've obviously done my prep here, so I can see the numbers up there.
Listen, real quick.
Yeah.
When we move to this step of the workflow process, all we're looking for is daily momentum. Has it taken out the high? Are we rejecting the mid of previous day? Right? Whereas momentum low, because if we check out this high, we can anticipate returning back to that high from the RTH, and it's telling us that momentum is still up, right? What's the biggest clue that's being shown right now is previous day mid, right? 1, 2, 3, three major rejections, right? But like, so there would be 3 hours that rejected this mid, right? Does that make sense?
Yes, it does.
I didn't mean to cut you off.
No, that's cool. That's cool.
All right, so now we're going to put our time-based statistics on. 3 of them. And anytime, like, you'll see that me and Kosu will make certain changes to this as we collect more and more data, right? But it will be very minute changes, and it'll be, we're always working on getting you guys the same data we have, right? So like right now we're working on scripts that will allow you to do every single part of this, the vet and all of these indicators that I shared with my layout, which you guys have about 90%. Like the only data that you guys don't have is the ability to do the projection-based probabilities based off of what Asian London's done, but we're working on making it a reality. Because the data I have is related to DR, and even though I have a lot of respect for the DR, right, I'm not going to disrespect them by sharing my own data that I've pulled and paid for myself through my spreadsheet. I'm not just going to like disrespect DR community that way. So we have to reinvent something that does the same thing without the DR naming.
Yeah, it's not necessarily a rebrand. It's
just using different time periods.
Exactly. Yeah. Couldn't think of the right word.
Which I'm friends with M7. Like I know he'd be okay with. He probably would be okay with it. I'm not going to say he would because I haven't asked him, but it's a respect thing, you know.
Yeah.
Like I respect him. He respects me, and there's no sense causing beef.
None at all.
Because I'm, violent. Because he's a business. I'm a business. Like there's certain business decisions that you either ask respect for, you find ways around. Right, so Globex Open is right here.
Yeah, would that be 2183?
Mm-hmm. Yep.
Yeah.
All right, should be 15 minutes.
I've actually got a confirmation London now, so that's good.
Yeah, Globex and settlement are near the same area.
Yeah.
That's always a great clue when you see that, especially when you're far away. All right, so now we've gone into the first 2 steps, generating market clues. The market clue was its mid holding of previous day. And then we put our time-based probabilities on here, which is settlement and Globex Open and midnight, right? Now we're going to go into our structure-based probabilities, which is on the 15-minute chart, right? Whatever the highest high, so 1900 and the lowest low from 1800 to 06, whatever the highest high and the lowest low is, has probability. So 3 o'clock and 1900.
Yeah. So do you want the
have
numbers?
probabilities? Yes.
Yeah.
Please.
87 for 1900, and that's 87%.
Let
And
me type in the
2192.
2192.
Yeah.
All right.
20.
That has it.
Yeah, you got it. Yeah.
Yeah. And let me put this one down here. Type in the number. And what's this one going to be?
78% at 264.
264.
Yeah.
All right. So now we've done our first 3 steps, right? Generated market clues, holding the previous day midpoint. Put our time base, midnight, settlement, which is 1615, Globex open 1800. We put our structure-based probabilities, which is the 12-hour high, 12-hour low, what their probabilities are. And now we're going to go into our projection-based probabilities, right? What does that look like? What has Asia done, right? So in this case, I'm using the 1930 to 2030. 3 to 04, what did we do after the 1930 to 2030? We went short. We held that short. We did not come and breach this side of the range. So this would be Asia being a short true. And now we're going to London. London from 3 to 4, and we're going long, and so far that's true. So the first thing we're looking at right now is this Asian midline, right? That's going to be our over under, right? Because if this line breaches, right, statistics shift, right? I thought I built one of these. Oh yeah. So if I called it Asia.
Pink.
All right. So we have 2 possibilities that will shift the current scenario in the probabilities, right? If we come down right here by 8:30 and we breach this London low, or if we breach this Asia mid, right? So we're going to put those 2 scenarios on, right? Our charts. All right. All right. What's above if that mid is broken?
As in the projections. 1 second.
Yep. Just the 930 to 1030 box for now.
930, 1030 box with the settings of being above Asia. We're looking at UXP.
Yeah. What's the probability of that?
Probability of the whole is 38 plus 12 is 50 plus 60%.
All right. Engulfing London.
London engulfing 24.
Below London's high.
15. Sorry about the bell ringing, guys.
Below the font. All right. Now we're going to do scenario 2. If London's low. Wait. If we go into that, what's the 1030 on stat?
I just thought of something. If we get up there, that means we've broken. I think that it might change, Nikki. If we're up above Asia, we would have means that at some point we've taken out the Asian mid, which I'm going to need to account for in the settings.
Wait, are you not? Yeah, that's what I'm saying. You should be pulling the probabilities of this mid being broken.
Yeah, so that would be between 3M and 930, right?
Mm-hmm.
Sorry, so I just need to make an adjustment there. So range is 23.
Mm-hmm.
64% for upside.
Okay.
And 13% for downside.
13.
So 13, 1, 3, broadly the same. Yeah, but
All right, and then 10:30 on, what's the highest
10:30
probable
on is
direction?
long, and that is 47%.
Okay, so now we're going to put scenario 2.
Hmm.
Actually, give me the probabilities because that's more, as we speak now, that's the highest probability. So now we're going to go to the vet. First thing I look at, the weekly range. It's Wednesday. The average 8-week range is 1,029. The current range is 261. The average daily range is 335. The current range is 128. So this is in the back of my mind when I'm doing this part because I want to know, do we have realistic expectations with these? Does it fall within the weekly range and does it fall within the daily range?
Yeah.
All right, so now, all right, so let me get this ready. Oh, yeah. Go to the vet, turn it on. Make sure you change this to Tuesday, 19:30, 20:30, 5-minute, 125, blah, blah, blah. Blah, blah, blah. All right. So now the first thing we're going to be doing is the 1. All right. Let me put the data in first. 20221. Ready.
Yeah, 1 is 91%.
91%. That's at previous day's highs.
Yeah. The
1, 2.5. Let me put the data in.
76%. 76%.
20273. 76%. Two zero three six zero for 5.
That would be 52%. 52%.
Okay. This is 20464. What's 8?
36%. 36%.
All right. Let's do some downside.
Downside.
All right. We can start at 5 because we already hit the 2.5.
Yeah. 41%.
Damn it. 1 minute. I think I just
No worries.
messed everything up. Oh, nope, I didn't. I'm just going to change this. All right. 19977. What is this?
41%. 41%.
Okay.
And the 8 minus is 25%. 25%.
All right, and that 25% is near previous day's lows. All right, so now we understand it's Wednesday. We still haven't even hit, we just hit 25% of the weekly range. So there is room to go up, right?
Yes.
All right, so now let's put the other scenario on real quick. Which I don't know what happened here. The Asian mid is broken above London, 60.24. And then we said 10:30 on is a long by 46%. And now scenario 2 is if London low is broken during or by 0830. 9:30 to 10:30 will be is above London high. Wait.
So yeah.
Yeah, high. Above London's high. Engulfing below London's low. All right.
So just to get the set inside right on this, on the query, are we saying that the London session breaks between 8:30 and 9:30, or can it be 8:30? Yeah, it's got to be.
So yeah, it's going to be between now and 8:30, right? We have a false day. So you should be removing the variable that Asia midline broke.
I did.
and
Yeah.
incorporating the variable that we have a false day.
Yeah. And or an 8:30.
No, because by 8:30, I'm not worried about it.
Right. Okay.
Like
Okay.
yeah.
Right. Okay. Ready when you are.
All right. Above London.
63% for one.
Yep. No. I want to know above London, like upside X.
Oh, sorry. Yeah. Downside.
Okay. What's above London? That should be a lower percentage.
Above 12.
So UXP,
Yeah. Yeah.
UX,
25%.
25% total. Engulfing, range X,
23%.
below.
9, 40, 50%.
All right. And after 10:30,
Long. And the
with
percent is
what?
49%.
49, 49%. All right. Cool. So now we have our probabilities, right, on the charts. And so now we're going to do our average daily range up here, which
Yeah.
is
335.
335.
Yeah.
Thank you. And we've been stalling out in the afternoons quite a bit.
Mm.
So I'm going to be paying attention if we stall out this afternoon. Like there's been no follow through.
No, not since last Thursday.
Yeah, it's kind of annoying. All right, so now the 4 to 8 range on a Tuesday, last 48 days is
Wednesday.
Wednesday. Thank you, is 37.
Yeah.
Right, from 8 to 12 is 96.
Yes. Actually, I have 98, but we're ballpark.
That's okay, bud. Yeah, that's okay.
Yeah.
Okay, and then from 16 or 12 to 16 is
12 to 6.
91.
Yes.
91. Holy shit.
Oh.
I keep forgetting about how powerful Wednesdays are. You got a high number for that too?
Yeah. 94.
That means, I wonder how many probably, see, that's a good thing to measure. It's like how many trend days happen on a Wednesday versus a Tuesday versus a Friday,
Yeah.
you know? So obviously, like there's, look at the average daily range, look at the 12
Yeah.
o'clock, look at this is the 8 to 12 o'clock range, this is the 12 to 1600 range. These are the kind of days that you expect to go 100% plus the average daily range. Does that make sense?
Yes, it does. I was just thinking that within that, there's obviously scope for those pullbacks in a possible trend or whatever, because we have that overlap. Right?
DWP, yeah.
Yeah.
Well, we've talked about it plenty of times. Like the first measurement of if the RTH is going to trend is going to be, can it take out the 930 to 1030 as it's developing midpoint? If it cannot take out that, you just keep slamming the bid or slamming the offer, depending on which way the market's moving.
Yeah.
This should go to 8 o'clock. We've already met the criteria? All right, so we said that we can expect something like this, right?
Yeah.
Right, lots of retracements. We can put this right there. This is a realistic expectation of the day, even given some overlap, right?
Yeah.
So now we're gonna put in our 9:30 to 10:30. Where are my scenarios? I keep losing shit. There we go. All right, so we know that another free indicator, opening range stat by Blue Jay. Right, this tells us the average 10-day range from 9:30 to 10 is 101, and the average daily range from 9:30 to 10:30 is 146. Right, so now we have our different scenarios. Right, if we breach this midline, right, we can expect the 9:30 to 10:30 to be above 146, like that. Right,
Yeah.
like this.
Oh, thanks, Don.
All right, and that completes our daily mock-up.
Hello, John. I'm speaking. How can I help?
All right.
Oh, yeah, thanks. And I got it all.
So now, let's see, turn that off. That off. Zoom in a little bit. This is the highest probable levels of the day. Doesn't mean it's going to happen. Remember, we have a live price for a reason. Jay says so. Thank you so much, man. Doesn't mean we have to do this, but now we have a game plan, a realistic game plan that's backed by pure data, right? That has probabilities on it, and now all we need is live price to confirm it. And remember, live price gets to trump. Live price gets to trump every single piece of historical data out there, right? Which is why we have our live price chart with the captain's hour and the hourly boxes, et cetera, et cetera.
Absolutely. Yeah.
Right? So we're not just going to like trade this blindly when we return to the midnight price, or if we come down to the 76 and we raid this, right? We're going to wait for the hourly boxes that we can position a fourth of our position in if we start seeing initial reversal patterns on the 1 minute. But we've got plenty of room to position into a reversal that turns into a trend that continues going. So you have plenty of room to onboard and offboard your position every single day, right? And it's just up to you to be smart about it, right? And use live price and align it with historical data.
Yeah, we got the boxes that'll help us. The hourly boxes, the 5-9.
And you got the chart, right? So are you making it public?
Yes.
All right,
it is.
so guys, that's amazing. All right, so let's go over the chart real quick, right? And I think it's very swell that he released it to the public for free because I was about to twist his arm and make him do it anyway, right? Or at least hope he did, right? So these are not buying and selling signals, right,
No.
whatsoever, but these are measurements of the kurtosis distribution, right? So if we go to Google and we have a conversation about what this means, what this indicator is telling us, right? And since you guys like pictures, I need to find one that's not going to confuse it over a little bit. Shit, I love you guys. Your image, this one's fine. All right. So if we look at this, right, this represents the rate of change, right? So this is a leptokurtic distribution. This is a mesokurtic distribution. This is a platokurtic distribution. When compared to, so ICT traders call this displacement, right? You're looking for the right displacement. Well, if it's like this is an indication of choppiness and slowness. So based off of the time frame that you're looking at, in comparison to, it has to have a measurement of time through it, right? In relationship. So let's say this indicator is looking like the last 50 days, 50 bars back. Well, it's measuring the speed, the velocity, and the percentile of each candle. And when one finally shows it, like over the last 20 bars, this candle right here, shows this type of leptokurtic distribution, right, which is the rate of change. This is an anomaly, right, compared to the last 50 bars, right? And the speed in which it did it in the direction and where it was shows us leptokurtic distribution. Meso is like an average bell-shaped curve, so it's like normalized, right? So this would be a version of it, this would be a version of it, this would be a version of it, this, and this, right? So that's the difference. Like this, now this area right here, you can just, by eye, you can see that this is all platokurtic distribution, because in relationship to these candles, you can see that the rate of change has completely slowed down, right? So now what this chart will do is it will show you the instances where like you're getting this leptokurtic distribution on your chart. These are not buying and selling signals whatsoever, right? But they're areas that show you that the rate of change is shifting. The rate of change is shifting, right? Where you're currently at. Does this make sense? And so, other than that, like, I'm good. Hopefully this was a good episode. Hopefully you guys got something out of it. Hey, listen, if you got something out of it, like,
We did.
subscribe, and, retweet, let more people get exposure, Other than that, I'm out.